Hello YouTube, it's Duarte once again from Still Not a Millionaire, and today we are going to dive a bit into the Portuguese market. But well, let's see if there are any investment opportunities. Going into our shorting platform, let's start as we usually do by looking at the US market. It was marked by a lot of consolidation, as you can see here. There was a large candle here on Tuesday. This week was marked most by the increase in unemployment by several companies such as Disney that are announcing that they are firing a lot of people. And today was mostly marked. Today, Friday, was mostly marked by the news that Trump has tested positive for COVID-19. Let's see how this will impact the way US is facing this virus. Are we going to see another lockdown or not? Well, we still don't know. But the truth is that it added some volatility into markets. Okay. But now going into what what we are planning to do here today, going into the Portuguese index PSI 20, we can see that it is reaching a significant low at the levels close of mid-May of this year. Okay, still nowhere near the lowest point when the COVID-19 had its first impact on markets, but still a significant low, significantly below the current price of the US market relatively to its low after COVID-19. So okay, so this means that well, even though some things, there are structural changes, of course, structural differences. Portuguese market can in fact have some better investment opportunities because we are getting a better entry price and we can have a higher potential return. But let's see which are the main companies of the Portuguese index. Okay, as if you saw my previous video, you already know that I'm using TradingView, okay, a free platform that you can also use in your browser. And we have this useful tool down here called Stock Screener, okay, and where you can select which country you want to filter your stocks, okay, not only stocks, but well, we are focusing on stocks, and since I'm from Portugal, I selected here. And you can also select filters. For example, when we trade, one of the most important things to be aware of is to trade only liquid stocks, okay, so that you can easily enter and exit your position. And it also guarantees in a sort that the stock isn't easily manipulated, okay. But for now I've just selected Portugal and I've ordered in descending order regarding volume, okay. So we have some stocks here. The next step, or what I usually do, is to pass these stocks. You can also use TradingView directly, okay, because it allows you to compare a lot of factors, okay. In performance, you can see those stocks that have, for example, that have decreased the most, okay, 3-month performance, for example, and well, the most recent change, extended hours, how stock is behaving, valuation. Of course, here you need to be cautious because well, the enterprise value depends on a lot of assumptions, and which are those assumptions we don't know. So when doing a valuation, I will suggest that you do it by your own, but now is still the time to just screen out some stocks, okay. So later we will do this valuation for ourselves. You can also see dividends if it interests you. For example, in my case, I will also give some relevance to dividends because I want to build a long-term portfolio, okay. Despite all the taxes and so on, I think that dividends is a good source of income to have to basically reduce the uncertainty of your portfolio cash flows, okay, instead of relying solely on capital gains. margins, which is also a good section in order to see if the companies are sustainable or not, how their business are behaving. Okay, for example, negative margins means that the costs of the company are higher than the revenues, so there's something that needs to be changed, otherwise the company will eventually uh, go bankrupt. Okay, income statement, balance sheet, well, most relevant measures. Okay, so but the next thing that I do, because I only want some of these companies, you can pass them in order to other platform that I usually use, which is Yahoo Finance. Okay, you can simply create a free account to just select your company. For example, let's see, EDP. Okay, it's an energy company from Portugal. You need to be aware of the exchange that is traded. Okay, this is Lisbon exchange, and we have it here. Okay, then after you select it, you can add it to your watch list. Okay, and why I want to do this, and instead of watching simply the stock screener that I have here. Okay, because here when you go to your watch list, you can easily compare the several companies I've selected already the ones that interested most by from TradingView. Okay, by simply looking at the overview, and also know some of the companies, so I've selected them here. And then you can come here and create your own view, so you can select the things that you want to compare them in order to screen out some of them, because when doing a more profound analysis, it is a task that is that is time consuming. Okay, so you want to exclude those that won't be potential trades. Okay, and I've selected my this view. Okay, so what I've selected here, first the last price, okay, the last closing price, so that we have a recent indicator of what's the price range that it is currently traded. The 200 days moving average, okay, it is basically a simple moving average, but it is constantly updated as new prices are formed. Okay, and why I've selected this 200 days moving average, because, well, it is a sort of a statistical phenomenon of reversal to the mean. Let's see, for example, once again EDP here, and you can see that I've already selected here 200-day SMA, which is this blue line, this thin blue line. So if you go, let's forget these lines that I've drawn here, because these were drawn a long time ago. If you can see, the truth is that, well, by definition, prices oscillate around the mean. Okay, as you can see here, the blue line, prices go down, then up, then down, and so on. Okay, and when price is too far away from its mean, we can assume that there is higher probability that price will converge to its mean. So what I also want to look here is to compare the last price with its 200 days moving average, and see if the price is too far away from the moving average or if it is close. And by looking only at this indicator, we can see that, for example, there are some interesting stocks that are far away. For example, NOS. Okay, even though it is only some cents away, remember that we want to think in percentage terms. Okay, for example, NOS, which is a telecommunications company. We also have Sonai Capital, that is higher. Okay, it means that we could take a short position, even though I don't want to take short positions for now, but well, it's still a possible investment. Gulp, which is an energy and a company that operates in the oil and gas industry, and it is in fact interesting because it is quite lower than the moving average. And I think we also have BCP, which is a financial bank, Okay, I don't want to invest too much on banks because I don't think that the industry is very healthy at the moment, and I don't think that banks will have an easy future with all the surge in fintechs and the low interest rates. So I will try to avoid banks, but this is the main analysis, and this is why I've included 200 days moving average, okay, to see if prices are too far away from the moving average. Then we have the price change. Okay, I think that is the daily price change. I won't care that much, but you can see that they are mostly negative. Okay, they are still decreasing. Similarly to the moving average, we can also want to compare the range, well, of during among which the price floats. Okay, and we can do it, for example, using the 52-week high and low. This usually acts as also support and resistance. So if prices are close to the high or low, we can be more cautious and watch if price is acting as a support or a resistance at that level, and also act accordingly. If we look here, it seems that in every situation the price seems to be in the middle. It doesn't seem to be near any of these lines. We have here the low. Okay, BCP is actually it formed, I guess, a new lower low. Okay, all-time low. But well, as I said before, I don't want to invest in financial stocks right now. Let's see if how it goes in the future, but I don't think that it is still the time to invest in these kind of stocks. Okay, now looking a bit into more into the valuation side. Okay, even though this is only a proxy, a rough proxy, and we only want to screen out some of these stocks. Okay, we can watch the price to earnings ratio. What is this? Basically, it compares the price of the stock, the closing price, okay, for example, and the earnings per share, okay, the EBIT per share, okay, where you would simply take out the EBIT, which is the earnings before interest and taxes, and divide it by the number of outstanding shares, okay, and you would get the price to earnings ratio, okay. And well, the thing is that the higher the price, the higher the ratio, I'm sorry, then the more expensive the stock will be. Of course, this is the we shouldn't assume only this ratio, okay, because well, stocks might be more expensive for a reason. Okay, we might expect that companies will grow a lot in the future, so there is a lot of demand and that drives price upwards. Okay, but nevertheless, this is a good proxy to see if prices are if the stocks are fair close to their fair value or not. Okay, there isn't a proper boundary in order to interpret this ratio as over expensive or not or cheaper. Okay, but well, what we usually do is to compare with the similar stocks in the industry. Okay, but it's also good to have it here in our screener. Okay, for example, Jerónimo Martins is presents a high price earnings ratio, which means that it might be a bit overvalued. Okay, according to the earnings that it announced. For example, on the other hand, we have Sonai Capital with a negative for price to earnings, which means that we are expecting that the company will have negative earnings. Okay. Um, we also have, for example, look at this Sonai. Okay. We have a trailing price to earnings. A trailing is basically a historic price to earnings of 20.25 times. Okay, but the forward price to earnings, which takes into account the estimates of analysts, regarding the earnings that will be generated by the company. Okay, I'm sorry, I mentioned EBIT as earnings, but it is usually used net income. Okay, so it's after interest and taxes. So I made a mistake before, but this divergency means is that we are expecting basically that the company will have less earnings in the future. So this price to earnings is expected to decrease, which means that, for example, the stock is overpriced and you could take a short position based only on this. But as I said before, you shouldn't consider this as a sole as the only measure to decide, because well, in fact, you don't know how they calculated the price to earnings. Okay, because well, you can use several prices, and you are using the analysts' estimates. You don't know what they thought about and what how they made such estimates. So it's always good to have a notion of how what you expect from the industry by your own research. Okay, and that's what we'll do in the upcoming days. We also have the dividend payment date, which is interesting because you might want to, well, depending on the history of the company, you might be expecting, for example, a dividend increase or something like that. And if dividend is coming closer, you might want to enter before the dividend is paid in order to benefit from it. Okay. Dividend per share, as the name suggests, is the total amounts paid in dividends but divided by the number of shares. Okay, we are talking in cents here, but what we want to do is to basically, of course, assume this as a percentage of the price of the share. Okay, and that is essentially what we get here: trailing annual dividend yield. Okay, trailing is, as we saw here in the price to earnings and in the moving average. Okay, we are basically using the latest closing price in order to calculate the dividend yield. Okay, and well, what we want here, if you are looking to companies that pay high dividends, okay, we want to have a high dividend yield. It means that for the price you pay for a stock, you're getting a higher dividend. Okay, and we can, for example, order this in order to in descending order and see those companies that pay the highest dividend in order to, well, potentially start our analysis by them. Finally, we have Ebitda, which is earnings before interest, taxes, and depreciations and amortizations. Okay, which is basically the gross profit of the company, and we want, of course, this value to be positive first and to be the highest possible. But this will depend on a lot of factors. We also want to consider the EBITDA margin, okay, because we want to consider, well, from such amount of sales, the company was able to earn in net terms this amount, okay, and we want that the company to be able to minimize the cost that it has in order to get the most out of its sales. Okay, so we are using EBIT here, but it's only a measure of, so that we have a notion of how much the company earns. Okay, and of course we want it to be positive. These companies that have no value, well, it's because they are probably negative and we want to stay away from them. Okay, and now which will be the companies that we are using that we will analyze. Okay, well, the first thing that I will see is precisely this first analysis that we made here. Okay, first technical analysis in order to see if these companies in fact interest us or not. And we have some companies here, for example, Gulp and Nosh. Let's take this for example, okay, in order to, so that this video won't get too much time. So we have Nosh, okay, telecommunications company, and Gulp, for example. Gulp, which is a company that operates in the oil and gas sector. For example, going into Nosh, I'm sorry for these notes because I've already examined company around here, okay, when the COVID was had the most impact. As you can see, the company is close to the previous low, which can be good because this can act as a sort of support, and we could be able to enter in a long position and profit around almost 50%. Well, in the best case scenario, okay? But what we want to see here is basically that the company is still pretty far away from its 200 days moving average. Even though it is negatively inclined, it means that the stock is trending downwards, and we don't want to trade a lot against the trend. It still means that we might be able to have a profit and take advantage of this divergence. Okay, that is basically the analysis we want to do, to see if the stock is far away or close to its min. And then we also have gulp. As you can see, this follows a similar pattern as the one that we saw before. In fact, here the stock is performing has already passed to a new lower low. Okay, it's also associated with the impact that the oil, the volatility that the oil has been facing. Okay, and we need to be aware of this, of the industry, of which are the main key drivers of the industry, because companies are affected by what happens in the overall economy. Okay, but in order to finish this video that is taking too long already, this will be the main idea that we will use for our stock screening. Okay, we have already some companies here, and we have reduced it from all of this that you can find here to only these ones by looking at the volume mostly. Okay, and already knowing some things about the company. We have already defined the main criteria that we will see here, which will be the divergence or the difference between the recent stock price and the moving average, and also dividend yields, because I will be investing in these companies for the medium long term. Okay, so the next step and the final step will be to do a deeper analysis, more focused on the fundamentals of these companies, looking at its industries, and see if there is potential, if this decrease in price is only an impact of COVID-19 and people having fearing for their future and saving their money by taking it off the stock market, or if in fact we should be expecting some drastic changes in the structure of these companies and the industries they operate. Okay, for example, Galp, that we looked here in the chart. Okay, it operates in the oil and gas sector. So if you take a long position, you need to be aware that COVID-19 might have a significant impact and a permanent impact on the oil and gas industry, because demand for such commodity can be drastically reduced in the future, and not only because of COVID-19, also environmental problems that are nowadays very relevant in the society will also impact demand and consequently the revenues of this company. Okay, so in fact the low price that it observes today can be already reflecting this negative impact that is expected by the company, and making this not such a good investment. Okay, so but I hope that you have enjoyed this video, and even though we still haven't defined the precise companies that we will invest into, I think that this part of selecting the companies and defining some criteria will help you in order to avoid overthinking and being stressed out, because even though the Portuguese market has only about well, more than 20 companies is pretty small. When you go to the US market or any other market, you can find yourself very confused because there is a lot of offer, and without defining some criteria, you won't be able to start doing a deeper analysis of the company, which is essential before you decide to take a long or a short position. Okay. But on the next days, we'll be doing a deeper analysis of each one of these companies. So I will see you there.